My, I yeah, sorry. I forgot.
All right. All right. All good. Cool,
All
man.
right.
So, what's on your mind? What's been going on with you, man? Your mic's muted.
There you go. Are we there now?
Yes, I can hear you now.
Okay. I put my AirPods on. I'm at the staff house. Oh, nothing, man. It just drawdown from hell. So I didn't really put the real numbers out there. I probably lost 40 grand in the last, basically since I quit my job. And that's why I pulled all my cash out. It's just, it, you get down so much, there's just, you need to take a step back. And so what really happened, and I'll tell you this so that we can kind of proceed forward the best way possible. My trading was going good. We were working through some stuff and I did what everybody does. I had a little money socked away and we had taken a home equity loan out to work on the house, so that put a bunch of money towards that. But we had my trading money over here, had my job. Then I had this other project. It's a contracting project, so I sell for an oil and gas service company. So they pay me like 7 grand a month and 3% commission. But in the US, things are so fucking expensive. I think it's like that over there too, but it's so expensive. I got 4 kids, and even in a small town, I mean, we just spend a lot. And we don't even have nice shit. Things are just expensive out here. So, anywho, the long and short of it, I resigned the job because I'm miserable, right? I've got job A, got the consulting gig, and that's paying. It's basically matching job A, and then trading, starting to put 1,500, 2,500 a month for the last 4 or 5 weeks into my account. I'm like, okay, I'm here. I'm ready. I'm ready. Like, I've got my job. I'm not quitting just to trade. I've got a side income. We've got this big project kicking off. This is going to be 700,000 a month worth of, so it's directional work. If I sell one directional job, they average about 6 to 700,000 a month in billing. I get 3% of that plus the 7,000. It's good money, right? And so the kicker is I quit the job and the project pushes back 2 months, like 3 days later.
Mhm. Yeah.
So I
Yeah.
go from, and the 7,000 doesn't become 7,000 until the project kicks off. It's actually 5,000 until the project kicks off. So I go from having a full income and trading kind of carefree, learning, losing ups and downs, but not being, to holy shit, I have no more income. And we had 3 months socked away, but that's going quick. The remodel's getting expensive. So all these external pressures are just stacking up. Money's going like hotcakes. It's like we're setting it on fire. And I start trading desperate, and then I start sizing up, and then next thing you know, I start blowing up. And it's funny because it's what we talked about in the beginning. It's not like I lost progressively. It was like make 1,000, make 1,200, make 1,500, make 1,000, lose 8,000,
Mm.
make 1,000, make 1,200, make 1,500, lose 300, make 500, make 1,000, lose 12,000. So it's just the same MO. There was that day that came where I just couldn't take an L, and I would just keep going and keep
Mm.
going and just start throwing darts at a certain point. So the positive, before I let you get into it, the positive is losing sucks, but fuck, I feel like as weird as it is, I've gotten a shitload better since then. Like I feel like I'm a miles better trader than I was. But the truth is, the reason like I went to the $2,000 account, and the reason is because right now in my current mental state and personal fiscal state, I am so desperate for cash. I'm not even broke. we're not anywhere near that, but the way my mind works, I feel like I have $5 to my name. And it is fucking with me so bad that I can't, like, it just, even losing like 300-400 bucks, which is I put my risk limits in DOS. I put my risk limits on the sim DOS for boot camp. Like, I blew up in boot camp like $300-400 days, just trying to do too much. Even John was like, dude, you need to slow the hell down. Exactly what you say, you know. I just got in a hurry, dude. I got in a hurry trying to live this mythical life of being a profitable trader, and I've only been doing this since December of last year, and it's not there yet. And that's all there's to it. I've been doing it for 18 months and I'm not there yet. And I came to terms with that. And what I told myself is that here you get $2,000 to play with. Take one option or two option contracts. If Megan can build up an account to 25,000, you better learn how to build up an account to 25,000. Because if not, there's no need to be trading money because you're not there yet. And you've got boot camp, which is basically free money. You're averaging 400 to 500 bucks every day you're green there. Just fuck around with boot camp and do one or two options trades a day with small levels and get your confidence right. And the biggest change was that we talked about extending trades out. My problem is I've been so like I've got that engineer mind. So it's a hybrid, right? I'm the artist, the engineer, and whatever. Long story is I fantasize about all these big wins, but in my head, everything has to be meticulous and planned out. But I take it too far. Like you and I talk, and I'm like, okay, I'm I have a rule. 1R is cool, but I'm not setting my stop loss till breaking until 2R. And then at 3R, I'm going to set a trailing stop loss and I'm going to let it go. And at 4R, I'll take 75% off, double the position and go back in. That's cool when it works, but I was ignoring price action. Like I would sit there and watch, be like, oh, and I'd sit there with my coffee. Oh, I'm getting stopped out with my mud water. And I would just let it happen instead of taking profit and setting my stop to break even because in my mind, I was following my rules. And what happened is that my win rate was only 31%. Now, when I won, my green trades were all 4 or 5 Rs and they were offsetting my losing trades, which were only 1 Rs. But I couldn't handle it. It's like you said, making it where your personality works. My personality couldn't handle losing that much.
Mhm.
And so I would do good for a day, 2 days, 3 days, and then eventually it would just tear me down and I would lose my shit and blow up.
Yeah, I get it. Yeah, that's Hulk days. Those Hulk
Mhm.
days really it can get you. So here's the thing. One good thing is, as you said, through this journey of having some losses now, you've become a better trader. And that's a good thing. Let me tell you what I like to do that helps, that I think you're doing as well. I actually keep my day trading account as small as possible as the as amount of cash is concerned. So, I don't keep $100,000 in the account. I usually use $25,000 accounts for day trading. And if it gets closer to 50,000, I take it off and bring it back down to 25,000. So that puts you in a mindset that that's all you've got to work with. You better not be blowing it up today or even blowing up 50% of it today. So that's a good thing. I mean, I know lots of traders who do that. They do not allow their day trading accounts to get big, as in make money, make as much as you can, but take it out of that account quickly. Now you're in that position where you're working with a small account. So you're in the same place. That's a good thing. This really brings risk management to the forefront even more, makes it more intense. So you're actually in a really good place to launch from.
Yeah.
I'm telling you, I used to work with 400, $500,000 accounts, and I've actually downsized it very intentionally to this $25,000 size,
Yeah.
and work with 5-10% per day on that size. So you're in a good place. Now you're working with, what is it, a $2,000 account. When it grows into a $4,000, $5,000 account, then remove $1,000 from it,
Yeah.
put it away. So the bigger picture is that. Think of it that way. Irrelevant of your net worth and what you've got going on in your other finances in your life, your day trading is only this much.
Yeah.
That's all you've got. If you blow it up, that's it. You're out of business.
Yeah.
So really that forces you to take high quality trades, that forces you to take only asymmetric trades, and then that forces you to take the profits when you need to take the profits. That's what you were talking about with price action. Now, you've got to watch price action because if you have these flat rules where, at 2R you take it at break even, at 4R you take your profit, whatever, those rules work, but they work for people who are volatile people to
Yeah.
the price action, who are just so sensitive to price action they can't handle themselves. They immediately take it off, or they hold too long, whatever. For people who can't
Yeah.
handle it, but you can handle it. You can watch
Yeah.
price action and make a decision in real time rather than having these predetermined rules. You don't need that. I recommend these predetermined rules for other people who can't handle price action or aren't there yet. Just put your stops or put your orders in place and walk away. You don't need that. So it's important you take your profits. So let's say you get into a trade, the potential is 5R, let's say, the distance to your target. And at halfway there at 2.5R, it starts to struggle. It doesn't want to go anymore. Okay, take off 60 or 80% of that position and
Yeah.
stick your stop loss, at break even. And then if it wants to continue now, it looks like, okay, it's done with that consolidation thing and wants to go. Okay, buy those shares back. That's recycling your shares and stick
Yeah.
your stop loss at your new break even point.
Yeah.
And that's it. So you've got to do that. You got to realize that, 80% of your trades are not going to go to your target.
Yeah. That's been the new the new swap, is that it sucks that it happened, but it's almost like I force abused myself for the last 2 months of just watching trades go up and come right back down and stop me out. And if I didn't have my stops, the thing is, if you look at my losses, they're never over. Like in the boot camp account, my R is $45. Never lost more than $52 in a trade. Maybe 55 on one if it slipped. Same with the main account, it was $100 R. Never lost more than 105. But when I'd Hulk out, I would lose $105 8 times. Or in
Yeah.
boot camp, there was a day, it was fucking, gosh, Avi, I took 15 trades and 13 out of 15 didn't get to where I could set my stop to break even by my rules. And it was just like getting stuck with darts all day long, and I just kept going and kept going. Never moved my stop loss, never lost. I was mentally exhausted. Um, but yeah, the two trades that worked to like 2 or 3R, and it's a small size account. So it's only a couple $100, but those are $400 minus R days. And now I'm sitting back looking through these trades and I'm like, why didn't you just take 50% off right there? You knew it was stalling. It was there for 3 minutes. Like, you see the level, but like you said, like I'm glad you reaffirmed that, because that makes me feel better. Like, I think I am beyond that. Having the rules is nice. Having the rules of when to trade, like that I stole from Thor, those are kind of nice. Like, I like saying, okay, if trade one works, trade two works, trade until you get two consecutive losers in a row, right? Like, I like those because that helped me with boot camp. I know I was critical at first. Now I've realized, like, my trade book was good for losses, but I didn't have a plan for taking gains. And then I put one in place, and instead of testing it like I should have, I went at it full send and it cost me a lot of money. And in that process, I realized that it's not that black and white for me, but now I'm coming to like a good middle ground with it. But I also, more importantly, I have trade limits now that I understand. So for me, if I lose the first two trades, I'm like, whatever. I take a third trade. If it hits and breaks me even, well, then I get two more trades. And I don't feel like I'm over trading that way. And I'm not nervous about it. And it controls my emotions. And that's what I like. If I catch a runner and it does go to 4R, I just set my stop loss, a trailing stop. On equities, it's like 0.0015, and on options, I think I do like 7.5%. I've been playing with it between 7.5% and 10%. But that way I don't stress. I just click the button and I watch. Now, if it takes a big spike and it looks like it's gonna die, I'll close it out. But I will say the positive is all my winners have started getting bigger, and all my losers are now small winners. That's what's shifted. And I've got some stuff we can look at today, and I'll have you look at. And I think the thing I get in my head about is, was I selective enough about this trade? Oh, it turned around and came back on me. But then I remind myself, like, it's just a fucking market, dude. This shit sucks. It's hard. Like, you're gonna be wrong a lot, but you might as well take what it gives you. And I wasn't doing that. I was inadvertently, I mean, I was being greedy. Didn't even realize it. And then I look back, I'm like, what? I just, and there may be a market one day where that shit works every time, but it is not right now.
Yeah, no, don't plan on the market working in your favor. Plan on just
Yeah,
taking
no.
what the market gives you. You get greedy, the market will slap you. It's as
Oh,
simple as that. It does
so
that.
hard.
So,
Yeah.
and here's the thing. Well, if you were in Vancouver, you would have seen Paras's presentation on this. But the whole point is recycling shares. The people who recycle shares make more money. As simple as that. Whether you
Yeah.
take partial profits or you take stop outs or you recycle and you scale in, recycling shares is the way to go. When you are able to reprice action decently, you
Yeah.
got to get into this recycling shares business. As in, it goes in your favor, it stalls out, start taking it off. If it
Yeah.
wants to start continuing in your direction, then add them back in, recycle it.
Yeah.
And you end up making more profit that way. You either take
Yeah.
small winners or massive winners and a few actual full stop outs. That's about
Yeah.
it. That's how I trade. And it works.
Yeah.
And so all scenarios are covered. You minimize losses, maximize your gains. Your winners are bigger than your losers overall. So I think that should be something you got to work on is
Yeah.
recycling. Think of it that
Well,
way.
the
Let's
the
get
biggest thing that's
some
come
trade.
together for me too is entries. Like the one thing I mean, dude, if I'm at a 30-cent entry on a stop loss, to me it's a loser before it starts. And half the time I'm like, I should have just exited this because I knew it was late. Like I'm realizing now more and more, like you would say, like once that level starts getting set into place, like if 155 is the number that it's holding at, I want to get in at 155 and I'll set my stop loss at 155.10. And I want in this boot camp account, I want to have 250 shares because that's all I can buy with it. And that's fucking 25 bucks. But the second that thing goes my direction, it's off to the races, and then I can make 250 bucks on 25 bucks in a $1 move. And so that's how I look at it. I look at it like the tighter I can make the stop, the quicker I can get to 4 or 5 R.
Mhm.
And the quicker I can exit the trade. The longer I make the stop, I mean, I don't see moves going two, three, $4 without big old pullbacks, and I don't have the balls to stick there. And with options, you can't. I mean, that's what I'm learning. Like with options, you got to be in tight and make that dollar move the hell out of that contract and get the hell out instead of trying to go in, survive the pullback, and then go down for the long run. It just doesn't. It works every once in a while, and I just thought it worked every time, and it doesn't. And so I think there's a lot of learning there. But yeah, what I've started doing now is taking probably like yesterday, I get on Tesla at 184 because it's holding over and over again, or maybe it was 184.50, and I took 2 contracts short. And I was funny. I was actually on my phone, just fucking around. Like, cause we were in the car going to the rig, and I'm looking through the charts, and I'm like, it's holding right there. I mean, it held for like 6 minutes at that area, maybe 8 minutes. So I took a short and said, okay, I'll make 182.50 my target. And that's what it was. It went from 184.50 to 183 and it stalled. And then I started thinking about money, which is the issue, right? And I'm like, well, it's only 30 bucks. But then I had to look again. I'm like, dude, it moved $1.50. Like, what else do you want? Like, you took a two out of the money contract because that's all you could afford, and you're up 30 bucks. And so I let it teeter around a little bit. And then I was like, I'll take one off. I was like, no, fuck it, I'm closing my position. And then it reversed and went right back up to where it came from. And I felt really good about that because as small as that 27 bucks was, it was 1%. And I'm like, cool, one trade, 1%.
Yep.
Yeah, Megan said something along those lines, like when you're in a small account, you take your profits. And she's right. Like 20%, 30%, 40%, that doesn't happen often. It's usually 5 to 10%. And when you've got a bunch of contracts, it's, there's more money there, but I'm not there yet. Anyway, I'll show you some trades. Sorry.
Yeah,
I get so excited when we're chatting.
yeah.
All right, let's see here. Screen. So the way my strategy has gone lately is, um, it's just been real. Wait, can you see the screen?
Yep, I see it.
Okay. Is it decent sized for you?
Yep, all good.
Okay, so I'm using fixed risk on the boot camp account, auto set stop loss, no profit take. Um, this went out the window, so that I was using stop loss, staying static till 2R. And then I was setting trailing stops. That all kind of went out the window this last week. Basically, I've been kind of moving my stop to break even at 1 hour lately. If I feel like the move is there and the move stalls, in my head now, I'm like, well, dude, it went 15, 20 cents your direction. If it stalls, it stalls, but there's no sense in losing money. Like, set your stop loss to break even. You don't have to take anything off because you have a small position limit anyway. But
Mhm.
what's the
Yeah.
point of losing $50? I mean, that's a waste of it. I mean, if it's not going to work, it's not going to work. But why lose $50? Let it pull back, and if it pulls back to your entry, and then it does what you want to do, just get back in. But at least you don't lose $50, right? So I'm trying to tell myself, when you're trading with 500 with $1,000 risk, like it's probably smarter not to lose that $1,000 over a trade that's turning. So um, this has really gotten loose. So what's happened lately? So if you go back a couple days, this was before um, these trades were awful. So I'll diagnose these with you. You could just see the whipsaw price action. There was no need to be in that. And you can see the quick stop outs. 1, 2, 1, 2, 1, went up a little bit and then got out right there. So this winner paid for these losers, but it was still a stupid trade. There was no need to be in there. Um, what I realized on this day is that I like reversals. I like tweezer tops. I actually went through your video. I'm halfway through it in Trading Terminal, and I liked your dissection of candles. As much as everybody gives shit about candle patterns, I mean, it is pretty clear when you see two tweezer tops on a 5 minute, and then you go to the 2 minute and the 1 minute, you'll see where they hit for fucking 10 minutes. You can pretty much set a level there and just take a short. And
Exactly.
if it goes, cool. If it doesn't, you're 10 cents, you're gonna lose like nothing. And then F it, right? If it breaks the other direction, I typically like to let it break, pull back, and then if it pulls back and goes with volume, then I'll get in there. What I've told myself is I pretty much only enter trades when it does the opposite of what it's been doing. So I don't know if that makes me a reversal trader, but it's pretty much always after a pullback. I'll never just hop into a long that breaks out. They just haven't worked for me, and maybe that'll change over time. So right here is exactly what we talked about. See these two tweezer tops right here?
Yep. Yep.
They're not perfect, but they're close enough, and you can see the body of the candle sits right there and right there. On the 1 minute, it's not a perfect set level, but having this 162.20 level on yesterday's high, um, it's tough to see it in the rear view, but here it stopped the body there, it stopped the body there. This candle spent most its time there and then came up and failed. And then this candle kind of failed quickly and kind of spent most of its time below this level. So I'm like, that's a level. So I think I set my stop loss to, yeah. So it's 162.20. I set my stop loss to the top of this body, which was like 162.40. So like 20 cents. And I took it short right here.
Mhm.
Um, in this scenario, I was playing with my trailing stop, and you can see we went from $1.20 to $1.70. Um, how would you have handled this?
Well, the entry looks all right. You got to understand on the entry stuff, first of all, these levels are areas. Don't treat
Mhm.
them as precise. Now, when you have specific levels like yesterday's open and close and highs and lows, that helps make it precise, but it's really, they're always areas. Okay, you get a little more precision by using the previous levels on the high of yesterday, for example. Um, that's the first thing. The second thing, it looks like you took it off before it got to your target, before it hit a target. And then it looks like there's a pretty obvious target there. You can just use the opening price. I would probably use that on this trade as it passes through previous day's close. It looks like, was that
Yeah,
161.60? It goes through
yeah.
there. Next target down is basically the opening price. I would use that as a target to take some off. And sure enough, it struggled around about that area. You can expect it, to hit opening price, take it off, and then when it wants to continue after the opening price, again, recycle and go again.
Yep.
So that's
Okay.
how I handle it.
So, and this was back when I was in my swear by the trailing stop phase of my learning to profit take 2 weeks back, right? So, what happened is the trailing stop was right there. It went up, I had a 10% trailing, and then it pulled back and it stopped me out. And so I told myself, well, I followed my rules. It was a decent trade. I mean, it was like, I don't know. I think I had 10 contracts at the time. So it was probably $400, give or take. But yeah, it would have been $1,000 trade, right? So I think here moving forward, if it stalls, which it did right here, I think what I would do now, say I've got 2 contracts, I'd probably take 1 contract off and set my stop at break even and kind of see what happens since it didn't get to my target. And then if it breaks my target, then I would add the contract back and let it go.
There you go. You can definitely better way to do it. These trailing stops are interesting, but you got to understand they work really well when you have an established trend. And usually you're using a moving average in that case.
Yeah.
But the way to use trailing stops in this style of trading is use levels. Just trade once you're confident it's holding a level. Okay, stop losses on the other side of that level. That's it. That's the same
Okay.
thing as recycling. You move your stop loss just on the other side of that level.
Perfect. Yeah, saying this was done as a mechanical, and you can see my early entry right there. That was a quick in and out, 120 out, 110, 10 cents. So it was $100 loss. I think that's when I got in right here. So what I've learned with these levels is, like you said, they're cool, but every day I debate taking them off or not because I find that they create too much bias for me. You know what I'm saying? Like I see it here, but if you take those lines out, really, I would just be going off here. And 162.60 should be the entry or should be the top out, and 162.30 would be a good entry instead of trying to enter on this, right? So my entry should be up here with a stop up here. But looking at this level, it tends to mess with my head a little bit. So what I've been doing lately is I look at them, but then I force myself, okay, it's there, but ignore it. Let's look at the price action. That's changed from this trade to the ones we're about to walk into. NVIDIA, I hate this ticker. I don't even like, if you see my notes, undecided chart, stay away next time. Traded on an indecision candle. Like, I got something out of it, but it wasn't a good trade. I wasn't happy with it. I think I was pissed because it stopped me out 2 or 3 times, and I wanted revenge on NVIDIA. So, so those have got to go. I've actually taken it off my watch list. I don't like it at
It's
all.
it's it's very different than all the other tickers recently, especially
Yeah.
recently. So if you can't
Like,
read it, yeah, just get rid of
yeah,
it. No.
yeah. I love that Preet trades it, and I'm so happy for him trading. I've been a comment to. I was like, dude, the fact that you can do a video the way you do is mind blowing. I can't touch it. I would love to see what my stats are long term on this stock, but it's not good. So I labeled all my trades out. Price action is gross, emotional trading, scissored the day. Let's avoid this. So I lost 250 on this. So I ended up closing the day with like $500 up. It should have been 750. None of these trades should have happened. So I actually left the day up, but I was upset with myself. Um,
All right.
Tesla. I don't even know what this is. Oh, this was the account. Um, Yeah, this is, see what I'm talking about? I entered here at $1.85.15, came down to $1.84.42. I didn't do anything except set my stop loss to break even, and I let it come all the way back and stop me out.
Mm.
Uh, yeah,
Well,
see, so I was entering on this consolidation right here.
yeah.
I wish I had a better chart to show you. This was a chase. This was a bad trade. Um, Actually, these are 2 different things. I don't even know what these are. I put good reversal, 2R pullback after 3R. That stop loss move trailing stopped me out. I don't know.
Yeah, I can't tell much of what's
Yeah.
going on.
Oh, yeah, don't worry about all this. So this is when I was playing with my colors. Yeah, I know. Uh, da- da- Yeah. So, oh shit, you can't see it because they're green on green. But here on AMD, I saw the 5 minute. and I saw it kind of move down. Then I saw it kind of come up, and it seemed to be in this trading range between here and here. Looking back on this isn't really a good trade, but I set my stop loss to the top of that candle, and I came in here and caught the drop. But my entry was late. So you see it over here on the 1 minute. Actually, it looks a little bit better over there. But you know, you got 1, 2, 3, 4 bodies that are lining up. I mean, I'm seeing that as a pretty decent consolidation pattern. So I set my stop loss right up here, and I take the drop, and it goes from 158.35 to 158.06, but then it pulls right back. So in hindsight, I'm like, well, that was just kind of a chop trade. Is this avoid it because it's in the middle of levels and just don't do it? Or what's your take on it? It's because
Listen,
I
you
tend to
just
do this a lot.
entered late. This thing, look, it broke out going down from that level. Then it retested. You could see the retest on the 1 minute basically made a double top.
Yeah.
The retest. You want to enter as close as possible to that level. That way you have asymmetry on your side. The
Okay.
entry was way, way, way late.
Yeah.
At that point, don't enter. Let it go.
Okay.
And
Got
then when
it.
it goes down and see your entry candle is that red candle, and the very next candle is a green candle. It's a tiny, well, tiny, smaller green candle, but the volume is still approximately the same of the previous candle. So that's telling you that, hey, this downtrend might be over right here. There's lots of buyers sitting down there. So that's where you want to be getting out. Now, if you had entered way earlier, closer to your level, that would have been 5R just there, just to
Yeah.
get out there.
Yeah.
And you had had no problem getting out, even though it didn't get to your target. You still got to get out. That's where you got to get out on this trade and stick it at break even.
Yeah.
That
I think
entry is
the
it's all in the
yeah,
entry.
this is emotional trading right here. This is back a couple of days. I think I was still getting my ass kicked. And I was feeling it. And so here's the 17th. This kind of went back to my old trading style. This was the days where I sent you where the first day was all red trades. That was this day and this day. And then this was where, even though there were a lot of small trades, there were a lot of green trades. So I saw Tesla on the, I don't have a 5 minute here, but I saw the set for a break. Yeah, and you see I labeled 186.36 right there across there. Because it just kept tapping, 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 tapping. And again, this to me is probably a little bit of a late entry. I was about 186.20. So it's about a 16 cent. I guess it's not terrible. But I got in above the level.
Mhm.
But I don't know. What are your thoughts? I mean, it worked. It started going down. It stalled pretty hard here. So I took some off. Then it came down again here and I took some off here. These are like little 10% hits. And then it pulled back here and I added, came back down here, took some off. And then here, these were just dumb ads. These were like, I think I'd hit my number. And at that
Mhm.
point, I was like, I'm just going to add to it. And if it pulls back, fuck it, it'll stop me out of break even. If it doesn't and it goes down, then cool. But I had already pulled like 90% off that trade and I was kind of done with it at that point.
See, what you're getting here is you're entering before the breakout. What's telling you that it's going to break out? Is it setting up for a breakout? Is it a wedge pattern? Is it some sort of ABCD pattern? There's got to be a reason for you to enter before the breakout, anticipating the breakout. There's nothing wrong with entering before the breakout, but you got to have a good reason for it. You got to know or have conviction that it's setting up to break out. Like there's liquidity on the other side, or it's a reverse ABCD pattern setting up. So we don't have all the price action here. It's only from what 11 o'clock or so.
Yeah.
So that would if we had more price action, we can get a better picture of it. And also then watching the liquidity. Now, most likely there is liquidity further down. The volume here is telling me that. So if you'd watch that, you might have seen bids further down and you could target those after the breakout. So that's one thing to tell you kind of where the targets are. But what's the setup for the breakout for you to take that entry? Now it worked in this case. Yeah, fine. But you got to understand why it could have
Yeah,
worked.
and this is what I probably need help the most with. In my head, what I see here is I see the price spike up, come and stop. Spike up, this candle kind of stops right about here. Spike down, come back, go up, stop. go down, go up, stop, go up, stop, go up, go down, come back here. I'm like, okay, I've seen it hit this level where it's yellow on 1, 2, 3, 4, 5, 6 minutes. It's either gonna break this level or it's gonna fall. Because what I see in when I'm looking at charts is you see the volume, stuck, volume, hit, low volume. I guess right here, now that I look at it, low volume got it from here to here. So you would think that that would tell you that I mean, it's probably gonna break that way. In my head, I'm looking at that, I'm like, okay, and then a low volume hit there, push me down there. So in my head, I'm like, if I enter here and stop here, whatever.
Mhm.
But over and over and over again, it can't seem to break this level. And every time I see this, it's like it's not so much exhaustion, they just run out of gas and then it drops.
Mhm.
And sometimes it drops 50 cents, 30 cents, sometimes it goes. So I don't know if that's a good strategy or not. But that's how I see it. I wish I had the 5 minute on here because
Now that's pretty good. You know, let's build on what you've got. Looking at the volume, okay, now look, the red candles, the volume's bigger than the white candles. That's telling you that there's more bearish than bullish. All right. And now looking also where you're saying it went up and it kept hitting and coming down, look at the highs. The highs are getting lower.
ah, okay, okay,
So
yep,
you can draw a triangle there, right? The
yep,
highs are getting lower and the bottom is the flat line, the level you got there. That's a wedge pattern, right? With the appropriate volume profile.
okay.
Now, with
It,
that, if it already came down, as in it's a reverse ABCD pattern from the last
mhm.
30 minutes before this action, that would give even more conviction. And then on top of that, you got liquidity
It
further.
had, this was where it dropped down
Mm.
early. I wish I had the earlier chart. It went down like this, came up and was in consolidation. That makes it make a little bit of sense. And so in my head, I was sitting there watching it hit, and it had already been down here, I think, or like down to here. And so I was like, okay, it's either going to reverse or it's going to drop. And that's that's kind of how I've been trading lately. So if it's a wedge, that's awesome. I can build around that and start knowing what to look for. In my head, this is just what I see, and it tends to do the same shit over and over again. So that's what I'm basing it off of.
Yeah. No, this is great. This is really good. The wedge patterns are very, very powerful stuff. Um, okay, just for one moment, let me share my screen, then we'll go back to your screen. I want to show you something here. I think this is the right time for it.
Perfect. Let me save that real quick. Stop share.
Yeah.
Cool.
We'll stop screen. Okay, let me know when you're able to see my screen. Ooh, this is weird. Okay. You see this whiteboard on my screen?
Yes.
Okay.
Yes.
So what you want, let's say you're looking at the 5 minute, for example. Okay, the thing goes up and starts to consolidate. All right, all good. That's the 5 minute chart. And where it consolidates, you got a line. Well, that's not even a line. Whatever, you get it.
I know
Horizontal
what you're
level.
getting at. Yeah.
All right. Now, in this consolidation, all right, on a 5 minute, let's say you have three 5 minute candles, then you have two or three 5 minute candles here. Now, zooming in on the 1 minute here, if your candles look like this, look at that. You're getting a wedge where these lows are
Mm,
getting higher. So this is a tiny pattern in a grander scheme. And then if you're seeing liquidity sitting up there, what you can do once you identify the wedge, you might take an entry right, let's say here. Stop loss right below your wedge. Okay, so that's a pretty tight stop. That's your target. You've got plenty of risk to reward. Now, at this point, what you can do is enter maybe half size, not full size, even though you have a tight stop. And then when you're getting the breakout, you add the rest of your size in there. Now your new stop is right below your breakout level. Then typically you get a retest. At the retest, you confirm the retest. You can add more and then bring your stop loss right below the retest. So you see how your stop's moving up and you're able to scale it and go to your target. So here's your first entry, stop loss right below the wedge. At the breakout, you can add more, tighten your stop just below the breakout level or breakout area. Then the retest, wherever that happens to be, sometimes it retests below, sometimes at the level, sometimes higher. Wherever it happens to be, you're confirming you confirm that you're confident it does done the retest, you're entering on the bounce, that's here, or adding further. And that's when you can bring your stop loss nice and tight here, and off you go. At this point, you've scaled in, let's say 100 shares, 100 shares, 100 shares. It's massive by the time it goes. And every time you're not putting more dollars at risk because you're tightening your stop as you're
Yep.
adding. And notice there's no point in this picture where you're taking profits. This is all scaling in. So the bigger scheme of it is at the open, let's say you have two massive 5-minute white candles going up. Then you have one or two consolidation candles. Within the consolidation on the 1 minute, you're able to identify a wedge. Then you can start doing this stuff. And at the same time, you're identifying a liquidity level up there. Lots of stuff on the level 2 sitting and building up. It's getting bigger and bigger. And ideally, it's a horizontal line like yesterday's high or something like that.
Yep.
This is really high conviction stuff. I mean, this stuff I traded almost every day.
Okay.
There you go.
And,
So
and that's, I mean, so what I'm doing is when it does break, I'm not doing this obviously because I didn't know what I was trading. I just was like, okay, I'm seeing all this. Then I'm looking at the options chart. And I'm looking at the chain for liquidity. Um, and then I'm looking at the level 2. And it's funny, I've noticed a lot more this past week. You can see where it's stacking. And I never really looked at that before. Like you'll see, like I redid my charts where it's all gray and it highlights plus 3,600. But you'll see when you're going short, I mean, you'll see paint everywhere on the way to where you want to go. And then you'll see the long side's just kind of weak. And then, yeah, with the stop, it's usually 20 cents or so. And on this boot camp account, like, the max I can get because it's only a $12,000 account, I can only get 200 shares.
yeah,
So in my head, I'm in a $40 risk. And if it goes my direction, even to the first stop, I'm already 5 to 1. And all
right
these
on.
trades, like they'll be $400 trades. These are 8 or 10 to oneers, or they'll be $200 trades. And I have to remind myself those are 5 to 1s, or $120 trade. That's still a 3 to 1.
So
And then,
there's two things. There's two things here. One is on the level 2 stuff you're talking about. When you're getting into something like this and you're starting to see massive orders set up here, what you want at the same time, let's say you got this massive level 2 chunk sitting here, you want it to have a ladder on the level 2. So you want some liquidity going up, and you want this to be empty or much lower. You don't want balance on the level 2. You want a vacuum down here and a ladder of orders stacked up, building up to the big one. And that's my primary target. So it's got to have orders to climb a ladder, basically take it that way. The other thing is you really got to get your head out of the money. You're talking about dollars
yeah,
all the time.
I know.
Talk about process. You're talking about $40, $100, small account, big account. You've got to just establish what the account is, what your risk per trade is, your risk per day is, and then forget about it.
Yeah.
Then all you got to do is this process, process, process. Focus on the process, the price action, the levels, the patterns, the volume, all this stuff.
Yeah.
Because if your head is in the money, you're not gonna have enough head capacity for this stuff. You need to really just somehow get the dollar numbers out of the way.
Yep. I know.
That's
That's
really
why
important.
like I really went small, hoping that over time, I guess the thing I've learned like is when you're losing and in this phase of trading, it's hard not to focus on the money. I mean, just from a human level, like, because all you're doing is losing fucking money. So, I mean, you get in these phases where all I think about is getting money back. And I tell myself, you're never going to get it back. You got to get the process. But you can hear it in when I talk, like, I'm talking about money the entire time. It's a flaw. I know it is. But in
Look,
my head, I was like,
it's
go
not a flaw. Take it easy. It's not a flaw.
ahead.
It's normal human being stuff.
Yeah,
Okay, you're a human being. Don't discount that.
yeah,
Okay.
yeah,
And yeah, we live in this modern world driven by money unless you isolate yourself from the world. Okay, so that's kind of how it is. So here's one way you can do it. And really, as in trade with the smallest possible account, where to the point where money is so irrelevant that only thing you're trying to accomplish is not even making, you end up probably paying more in commissions than anything else. But you're
yeah,
trying to establish your habits as far as process is concerned. So trade on $1,000 account and your risk per trade is $5, whatever. So you're taking 10 shares per trade, something like that. Okay, whatever.
Yeah.
And then you're just simply focused on nailing the process. And if you do that for a month, to the point where whatever comes and goes at the end of the month, you do it for a month, end of the month, you'll be down maybe $200 grand total because of commissions more than anything else at that
Yeah.
point. Your share size is so tiny, it won't even matter.
Yeah.
It's do that for just a month with the absolute focus on this stuff, process, process, process. So the whole point of this exercise is to, again, develop the instinct for the right process.
Yeah.
So, but do it with live money, but tiny live
Yeah.
money. You do it in the
Yeah.
sim, that it kind of has a whole different purpose.
Yeah.
So tiny live money, 30 days, give yourself that time. Anyways, it's summer now, so you know it's a good time to practice because price action is likely to be kind of, let's say, not easy to trade.
Yeah.
So it's a good time to practice on process and give
Um,
yourself 30 days and then scale back into your regular account size.
well, and that's basically what I'm doing. A big part of it too is I've always been money driven. I mean, you've been there. I mean, when you make a lot of money and then you don't make a lot of money anymore, your goal is to get back to making a lot of money. It's fun to have a lot of money. I mean, it's a lot less stressful. These days, I don't want Lambos and cars. I just don't want to worry about bills. I don't want my wife to be stressed out. And so these last 2 months, I learned quickly that I need to have a secondary source of income that's sufficient, or trading just I'm not mentally prepared, nor will maybe I never will be mentally prepared for it to be its own thing, which is fine because I literally obsess over money and it fucks with my ability to maintain my mental composure to do the process. Because when you're mentally there, it's not hard. But when you go back and look at stuff and you're not mentally there, you're like, how did I do that? Like, fuck, emotions are powerful, man. Like, that's dumb. What was I thinking? Like, it's all good, but like, shit. So this coming out of me, it's the reason I did go to a $2,000 account, and it's the reason I am concentrating on the boot camp account. Boot camp, I'm stagnant. I'm back to even. I'll show you my thing after this. I'll go back to sharing it, and I'm literally right back to even. Up 500, down 500, and it's just kind of been. So I'm in the chop, which is fine. Um,
Here's
but
what you gotta
that's
do. You gotta even on bootcamp, for example, you're trading and you're trading these small accounts. And when you journal your trades, okay, don't journal green trades, red trades, as in losers and winners. Forget about that journal. Journal them as which trades did you follow the process and which ones you didn't. That's how you identify good trades and bad trades. Forget about the end result. Figure out the process. Did you follow your process, or did you not? Very simple. Just yes or no. You can make that on an Excel sheet, make a journal, and give
yeah,
yourself 1 month of creating that journal. You'll probably take 500 trades in the month or whatever it may be.
yeah,
And then look at it. Now, are you following your process 80, 90%
yeah,
of your time? That would be good.
yeah,
If you are, that's good. In the end, that's what will lead to your profitability when you get into the regular size.
yeah,
So keep that journal. I think for you, that's important right now. Just start creating that journal. Just
yeah.
simple
I've got one.
Excel sheet.
Yeah,
Yes, no. As in, did you
yeah,
follow the process? Did you not? And really, this is not like the win rate, in trading, where it should be 50%. No, this is, in this one, you should follow your process beyond 80% of the time. The times when you don't, that's the human nature stuff that comes in.
yeah,
But that should be minimized. As in, you can't be 100% perfect, but you can optimize at least.
yeah,
So minimize the times when you don't follow your process. And your process is right here, as in you see a wedge pattern, you see liquidity, you see whatever, this stuff. There's not much to it. You know the technical stuff. It's fairly straightforward. So do that journal and really look. It's quite eye-opening to watch that journal. I did that for quite a long time, and I realized, holy crap, it's in the bigger scheme of things. When I followed the process, I did make money, and then at the end of the quarter, that's when you really look at the P&L. That's when
yeah,
it matters. But for every week that goes by, am I following the process or am I not? And I realized when I'm following the process, my results eventually got better and better. It's funny, there's kind of like a lag in the P&L results. That's why I look at it at a quarter, on a quarterly picture. But the process, there doesn't need to be any delay in you following your process. So just build that habit, use that Excel sheet journal to keep yourself in check, keep that up on your screen all the time. And
Yep.
here's the fun part of that, kind of where I've actually started doing this now, is once your instinct for the process is so drilled in, then you actually can start trading with the P&L open on the screen.
Yep.
I've been doing that recently, and I realized that my process is so drilled in that the P&L will go up and down. I'm still entering and exiting and doing it pretty well as per my process without being disrupted by watching the P&L. So it's a test that you can do that test on yourself after a month of doing this, you know. So try that, make that a bit of a priority. And you've got Peak Capital, you've got the boot camps account to do it with. You've got your small account now to do it with. You can do it, do it all around.
Yep.
That
And
should be
so
that.
what I've been doing is I'll kind of show you here when we close out on this one. I saw something I liked. Like I like Mike's thing with breaking trades down, but it's a lot. So I do if my trades are um I do category one, category two, whatever. But another thing I saw that I like is I label them one to five. Five being it's in my head the right setup and I'm following my rules. Four is pretty good, like a great setup with a shitty entry or not a great entry, maybe a couple cents off where I want to be. Three is kind of like okay, one and two. One I'm throwing darts. Two dumb, one and two are bad. And then I put next to them whether it's a win or a loss so that I can kind of show myself, and it's pretty consistent. Like all the fours and fives are winners, and all the ones and twos are losers, and and I can tell when my emotions kick in for a day. And here I'll share this with you real quick, and you'll see like it's. I mean, it's pretty like going back to that day. Like, so we went through that Tesla trade. So here, see right here. So and I just kind of do that. And what I didn't do here, but I'll usually do is I'll put the good, the bad, the whatever, and then things I did good and bad on. But I'll put a percentage hit rate, so I'll know like when, and I'll take the percentage hit rate for the low ones, which is 0% in this case. This is my equity curve for boot camp right now. So, it's just up and down. There's been a lot of changes too. So I mean, this is the thing, I'm not beating myself up as much anymore. I think for me, I lack understanding on what I'm seeing. So I'm glad we kind of touched on like today, like if you look at this one right here, um, you go all the way back to this and I'm seeing a body out, wick out, wick out, wick out, wick out, body out. Big one slammed way back down, kind of wick out. And I decide to enter right here with a 10-cent stop, give or take. And then it comes up and it bodies out, it wicks, but I actually use that and I add to the trade right here, and then it goes. What is that in your head? Like, is that dumb or is that?
But what you're seeing is you're identifying sellers at that area.
Okay.
Plenty of sellers, and every time it goes up, you can see there's massive wicks pushing it down. I see at least two massive aggressive wicks.
And
These
it was
buyers
doing
are
that.
yeah, the buyers are definitely not in charge. If anything, the sellers are dominating. And this, quite literally, especially if you start seeing liquidity building up further down, it's just a matter of time before it starts to really drop. So
Yeah.
yeah, the entry looks good, and then scaling in, that's a little tricky because you're actually averaging down, which in day
Yeah.
trade is a
Yeah.
tough one. But you did it with the understanding that okay, the sellers are there, and once again, you're proving that the sellers are there. So you can't really fault too much on that add in. And then sure enough, you would have seen the tape accelerate as it started to go down. And
Yep.
then it's on its way. And at that point, once it accelerates and goes, very quickly you can put your stop loss at break even. And you're
Yep.
stress free within that first big candle that goes, at that point, just take it at break even.
Yep.
That's the breakout
Yep.
energy right there.
Yep. No,
And
these are
then
the great ones. I mean, these are the ones where it just goes and there's really not much thought to it, right? It goes and you're at break even. I'm like, all right, cool. Let's let it get to our target. And it got right there, and I was like, okay, cool. We'll call that.
nice.
Um, On this one, what I did see, yes, is every time it came up, it got like in my head, I picture a tug of war or a street brawl where there's people fighting like this. And I see sellers, buyers. Like it's just how I visualize it. And here I'm watching and the buyers push and the sellers just whip that ass, push, whip that ass. And I'm like, dude, they're going to run out of gas. And I start looking for orders and I'm not that in depth into the whatever, but you can see on the time and date or on the prints, you can see that level. Like it'll be like here in this case, it'll be like 155.90 or 150. It'll be like boom, all prints. Like the entire thing will get taken up with the same print. And then it's like, and then it comes back down and it goes up and then boom, the whole thing gets hit with the same print. And I'm like, dude, they've got to run out of gas at some point. And for me, it's just about, so what I did is I did the auto entry and it only gave me 109 shares right here on the first entry. And it set my stop right there. And then when it tested, or maybe I set my stop a little higher. And what happened here is when it tested, it bodied up, came back right here. I was like, man, this is probably going to go. I'm going to double my position, pull it up a couple cents, and I'm going to tighten the stop to the body, which was right here, 155.89. And so what that told me was that even though I'm increasing my size to 250, I'm only risking 10 to 15 cents here at this point, and I'm not going to let it get past $50, which is my R. Like I'm not going to let it get past -1 R. That's when I will look at the P&L. Honestly, I will. And I only do that. Like I know you're not supposed to, but it helps me visualize. Like once the trade goes my direction, I don't look at it again. But I look at the unrealized just to make sure that when I take my guardrails off, like I know where my level's at. I do the math in my head, but I don't have time to set another stop. So I kind of just keep that unrealized in the corner of my eye. And and I'm looking at my levels, if I see it go to like 50, $55, I'm like, okay, we're stopped out. But then once it drops there, I set the break even. I don't look at it anymore. And I just let the trade operate. And because it stresses me out. Like it doesn't
Yeah.
stress me out in a stop loss way. Like I'll never stop early or late, but it does stress me out when I'm green. So I don't look at it when I'm green.
Yeah, right on.
Okay, sorry, I know you gotta get rid of this one. I don't even know what this is. This is, I think I put this down as a 3. This is a shitty trade. Um, I saw the level. Yeah, there's nothing to build off here.
Hmm.
Do you see anything? I just see a bad entry,
Well,
156.50.
what was your stop loss? Is it just above that yellow line?
Yeah, yeah.
And what was your
So
target? Before you entered, what was your target?
that was the issue, is that I came in at 156.30. I had to stop at 156.50, which was 20 cents. There was no way it was going to go $1
Mhm.
because all the way down here where consolidation was, it was only like 30 or 40 cents.
You got to put this
So
in as a trade where you didn't follow your process, even though it was a green trade. So, two categories.
yeah,
You have the 4s and 5s and the rest. This goes in the rest, even though it was green. Yeah, you can simplify your 5 categories, is what I'm saying. You either did a 4s and 5s kind of trade, or you didn't follow your process. That's how I would see it. Again,
okay.
simplify.
Okay. Yeah, same here. Came down, chased in,
Mhm.
emotional at this point. Up, overconfident was this issue. Um, I did have the rule saying I could take trades and I just kept closing them out green, but these weren't good trades. Like here, I saw this stop the level one time. On the second time, I took it for a long. I think at this point I was feeling myself. So I had it set at 185, 186 to 186.96. So I saw that I had $1. I know money, sorry. I saw that I had a 5R as long as I could keep my stop within 20 cents. It went up a little bit. I set my stop to break even. It kind of started stalling, came back, stall out. So I just started taking profit out. And then once I took most of the profit out, I added to the trade.
Mm.
That's what it was. I took profit out here, added, thinking that it was going to take off. It didn't, so it stopped me out at break even. But there's no thesis behind this. This is just, I don't
Yeah.
even know what you call it. Yeah.
This is messy. You're getting involved in messy price action, basically.
Yeah.
And if you're not able to perceive it nice and cleanly and crisply, then don't play with it. Just let it go.
Yeah. And that's the thing. Like after the fact, I look at it at the time, for some reason that made sense to my head. And that's just experience has to get better.
Mm.
Um, do 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 do. Pretty similar here. You see all these levels where it's holding.
Mm-hmm.
Took a short here. Um, on a very high white vibe. Came down, came back to my break even, but didn't stop me out. Came down, uh, scaled out. And then I decided I was going to play it from the same level as a reversal and decided that down here was where the bottom was at. I think I probably looked at the 5 minute and saw like what I wanted on the tweezers. Banked on fail, but had a bad entry. Yeah, so came in up here when it should have been down here and scaled out there. I don't even know, honestly. So bad trade, what I'll call it. Um, this is 1 o'clock. I'm toast by there. And
Mm.
I've got maybe 2 hours in me before my head's toast, and
Okay.
I need to stop doing that.
That's a hard rule. That's probably the most profound rule. You got to know yourself.
Yeah,
And step away when you know you're done. Like for me, that's typically half an hour. For you, if you
yeah.
got 2 hours, whatever your stamina is, you got to stick to that. You got to know that and stick to it.
I'll add that. Yeah, I'll add that. Yeah, because you can see how they start off nice and clean and then just go to shit. It's funny to look at it in hindsight.
Yeah.
So what I was telling myself was, well, the rules say that I have to have two consecutive losers to stop, and I'm still closing out green on all these trades, so I'll keep going. I mean, I'll be honest, I was having fun. I mean, it was 8 for 10 green, small green, big green, but I was just feeling it in my head. And now looking back on it, I was like, Jesus Christ, guy, that was terrible. But I'll learn from it. So I'm gonna look up wedge patterns and start figuring out what that is.
Yeah, it's
Um,
very simple, really. It's just as we drew it there, just looking at triangles. You want, let's say in a long position, you want the lows to be getting higher. That's when the buyers are taking charge.
okay.
And the opposite, if it's a short position, you want the highs to be getting lower. That's when the sellers are taking charge, pushing it more and more to that breakout level. That's basically it. There's not a lot to it. The best way to use them is see them on a 1 minute chart in the context of a bigger picture time frame.
Yep.
5 minute, 30 minute, whatever you like. Then you get some good high conviction stuff.
So lower highs, higher lows.
Basically. Yeah.
Yeah. So I see that. So if I see like a double top on the 5 minute, if I see what I like, then I go to the 1 minute. And even though I'm looking for the consolidation on that level, what I should start seeing is little failures at a time with each candle. And that'll help me stay out of shit. Because I can look at half of these and say like half of these didn't meet criteria.
Yeah.
So
Yeah.
so I like that. Okay.
The wedge
I'll
patterns, they
incorporate.
show themselves a lot on 1 minute charts
Yep.
at specific levels too, as in at these previous days levels, these traumatic levels that I call them. They
Yep.
really want to show themselves there. You'll see it every day.
Yeah, I like to use the 5 minute to identify the trend. Like if I'm looking for a pullback, my rules say I have to do it on the 5 minute. But then and if I'm looking at consolidation, it has to be on the 5 minute. And then when I switched to the 1 minute, I was just like, well, look for consolidation. Now I can say, look for consolidation with a wedge pattern build, and that'll help keep me out of stuff and help me
Mm.
better identify it. Maybe tighten up my my green rate a little bit as well, and just keep me out of shit. Okay.
There you go.
I
You got it.
appreciate you, man. Yeah, that's what we'll do. I honestly, I think what I'll do is I'll trade 1 to 2 contracts per trade. Um, I've got a button that takes 10% of the account. I've got my training wheels. I'll set to $200 a day. Not that I'll ever need it at that level. Fuck, I'll probably set it to $100 a day, actually, which is 5% of the account.
Yeah.
I'll adjust that on Monday. I've got my training wheels set to 400 a day on the boot camp account, which is the way no, it's 200 a day now, which is 5 losses or 4 losses, give or take, 45 a loss. And I will work on process and just work on getting better. And the way I see it is if I can get used to these, and I know money, 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 I know, but if I can get used to stop thinking about things and like eventually $20 wins, like what I looked at yesterday is I was like, 20 bucks, 25 bucks, that's stupid. But then I stopped and I looked up and I saw the percentage. I was like, hey, that's 1%.
Yeah. There you
Like,
go.
cool. I did 1% today. Like, I can live with that. Like, feels a lot better that way. And I told Sarah, I was like, hey, look, money's shit, but it's 1%. Like 1% a day. I'll have this account grown up in no time. Let's I'm gonna keep fucking with this. Because now it's a challenge. Now I want to see if I can do it. Because if I can do it, the confidence that'll come from that will be insane.
Hmm.
Um, and that'll help. Oh, and here's the other thing. This job kicked off. So as of today, I'm making 350 bucks a day, and my salary just went up 2 grand a month. So should take a
Yeah.
lot of pressure off. Yeah, I told him I was like, you got to cut me weekly checks for the next couple of weeks just to get my head right. He's a good friend of mine. He trades too. He owns the company. I'm consulting for him, and he's just like, yeah, dude. He's like, get caught up. He's like, I had no clue this was going to take 2 months, or I'd have told you not to quit your job. I was like, me neither, man. It's fucking so good learning lesson. So whenever I see people say they're ready to quit to go trade full time, I'm like, don't fucking do it. Paris told me this a year ago in San Diego or wherever I met him. Like he goes, dude, I waited years. Don't do it.
Okay. You don't want to do
Fucking
that. Don't put yourself in that situation.
no, it's horrible, man. It has been the hardest mental period. Like, I mean, I've had some pretty dingers, but this has been a good one, man. So, but I'm still
It's
here. So, and I have no intention on stopping. It's just,
good.
got the same goals. The timetable's just a little different. That's all. So,
Cool. Hey, you got this. You know what to do. You're in the right headspace. You got a process, you got a plan, and you got the right group around you, the right kind of people
yeah,
around you.
for
So,
sure. For
so
sure.
keep this going. You got it. So, anyways,
Yeah.
reach out to me anytime. I'm always around as well. Any
I
questions? No big
will. We'll
deal.
be back at it. I'll keep annoying the group text and all the fun stuff like that, and then we'll see how next week's looking for you, and we'll keep rolling. I'll institute this wedge thing. I'll put a lot of time, like, because that's what I'll go down a rabbit hole with now is wedge trades and just kind of looking at different people's takes on it, plus with what you and I talked about, and try to keep it simple. But it'll give more context to what I'm doing, which is what I like. It makes it easier to follow and it makes sense. So,
Yep. There you go.
cool.
Cool,
All right,
man.
brother.
Good. Good. Good stuff. You take it easy. Have a good little
Yep.
June break.
I know,
And
right? Yeah. I didn't even realize it was a holiday until I woke up this morning. So, all right, cool, man. Have a good one.
all right. See ya.
Later.
Bye-bye.
Bye.